Welcome to the deep dive. This is where we take a whole stack of sources on a topic and really boil them down to what matters,
Yeah.
getting you up to speed quickly.
hmm
Today, we're focusing on Tata Power. We've got some pretty fresh financial analysis that came out in May 2025.
Yeah, that's right. We've got three key reports here from stock brokerages:
Yeah.
Antique Stockbroking, ICICI Securities, and Kotak Institutional Equities. Pretty solid sources.
Exactly. And our mission, our goal for this deep dive is basically to pull out the key insights from these reports. How's Tata Power doing? What's driving their growth? What's the outlook?
Right. We want to help you understand the really important bits and, maybe more importantly, why they're important.
Okay, so let's get straight into it. The recent financial performance, Q4 FY25 and the full year, what's the story?
Well, revenue-wise, all three reports are pointing towards growth. You're looking at around maybe 7-8% year-on-year growth for the fourth quarter. And for the full fiscal year 25, it's more like 5-7%. The actual figures are quite close across the reports, too. Antique puts Q4 at INR 171 billion.
Right.
ICICI and Kotak are both around INR 173 billion for Q4, and for the full year, Antique has INR 654.8 billion, while ICICI and Kotak are both hovering around INR 645 billion.
So it's a pretty consistent picture on the top line then. It's growing steadily.
Yeah, definitely.
But what about profitability?
Yeah.
That often tells a more interesting story. I saw some big jumps in EBITDA mentioned.
Yes, absolutely. EBITDA growth was strong. Antique reported a 39% year-on-year jump in Q4 EBITDA, hitting INR 32.4 billion.
39%. Wow.
Yeah, pretty significant. Now, EBITDA, just quickly, earnings before interest, taxes, depreciation, amortization, it's a good gauge of operational profitability.
Right, the core business earnings.
Exactly. ICICI Securities and Kotak, they both reported a 27% year-on-year rise for Q4 EBITDA, landing at INR 34.8 billion.
Still very strong growth, even if not quite 39%.
Still very strong. And Kotak also gave a full-year figure for FY25 EBITDA that was INR 129.5 billion, up 19% from the previous year.
Okay, so what's behind this jump in profits? What are the main drivers here?
It seems to be a few key things working together. Firstly, the renewables business is doing really well. That's solar manufacturing and generation. That's a big piece.
Renewables, okay. Makes sense.
Then there's the improved performance of the electricity distribution companies, the discoms in Odisha. That comes up again and again in the reports as a key factor.
The Odisha discoms.
Right. And thirdly, the Mundra power plant. Its performance has been helped by the government invoking Section 11 regulations.
Section 11.
Ah.
Right, we've heard about that.
Yeah.
Just to remind everyone, that basically allows generators some flexibility if their power purchase agreements aren't working out financially.
Essentially, yes. It's provided support for Mundra's profitability.
Got it. Okay, so let's go further down. Profit after tax, PPT.
Yep.
Similar growth story there.
Generally, yes, though the numbers vary a bit more here. For Q4, Antique reported PAT up 25% year-on-year at INR 12 billion.
Good.
ICICI Securities had it up 16.5% to INR 10.4 billion, and Kotak reported a 20% increase, reaching INR 10.2 billion.
So positive across the board for the quarter. What about the full year?
For the full fiscal year 25, Kotak's consolidated PAT figure was INR 40.9 billion, which is a solid 20% year-on-year growth. Antique gave an adjusted PAT figure for FY25 of INR 47.75 billion, up 11.6%.
Any specific reasons mentioned for the PAT growth beyond the EBITDA improvement?
Yeah, Kotak highlighted one factor, a lower effective tax rate in some parts of the business. They noted the consolidated tax rate was about 20% this quarter versus something like 42% last year.
It's a big difference.
It is. But, Kotak also threw in a bit of a curveball. They pointed out that Tata Power's standalone PAT, so not the consolidated group figure, was actually down 52% year-on-year.
Wow, down 52%. Why was that?
They attributed it mainly to lower other income. It's a really important reminder, isn't it? You need to look at both the overall group performance and what's happening at the core company level.
Absolutely. That distinction is crucial. So good consolidated growth, but maybe some underlying weakness in the standalone entity's non-operational income.
Something like that, yeah.
And one more point on profitability margins. ICICI mentioned something about EBITDA margins.
They did. They noted the Q4 EBITDA margin reached 20.1%. That's up 320 basis points compared to last year.
320 basis points.
Yeah.
So 3.2 percentage points higher. That's a pretty healthy improvement in efficiency.
It definitely suggests better operational control, yes.
All right, let's pivot then. Growth drivers and the future outlook. all roads seem to lead to renewables here, based on what you said earlier.
Absolutely. Renewables are, well, front and center in all these reports.
Yeah.
It's flagged as the key growth engine.
Okay, so what are the plans? What kind of capacity are they adding?
They've got some ambitious targets for the current financial year, FY26. ICICI and Kotak mention additions of around 2.5 to 2.7 gigawatts. Antique's estimate is slightly more conservative, maybe 2 to 2.5 gigawatts per year ongoing.
Still, that's a lot of new green power coming online each year.
It really is. And the overall pipeline looks strong, too. ICICI and Kotak talk about over 5 gigawatts worth of projects expected in the next couple of years.
5 gigawatts in the pipeline.
Yeah. And Antique mentions this broader goal of getting from their current capacity of around 15 gigawatts up to 22 gigawatts by fiscal 27.
So a clear strategic push. A big part of this is their own solar manufacturing, isn't it?
Yeah.
How's that going?
It seems to be going very well. They commissioned significant capacity in the second half of last year. ICICI says 4.3 gigawatts. Kotak mentions 4 gigawatts.
And that's already feeding through to the numbers.
Oh, yeah. Big time. ICICI reported INR 15 billion in revenue just from solar manufacturing in Q4, with about INR 1.9 billion in profit. Kotak also reported INR 15 billion in Q4 revenue for the segment. That's a massive 547% increase year on year. They put the EBITDA from manufacturing at INR 4 billion, with a very healthy 27% margin.
27% margin on manufacturing. That's impressive. And they plan to keep producing.
Definitely. ICICI and Kotak both expect them to produce around 3.7 gigawatts of cells and modules in FY26. This vertical integration, making their own stuff, seems like a real advantage.
It certainly looks like it's paying off. What about building solar plants for others? The EPC business.
Also looking strong. All the reports mention a hefty order book for solar EPC. That's engineering, procurement, construction. It's around INR 110 billion.
110 billion backlog. That's substantial.
It is. Antique and Kotak break it down between rooftop solar, external utility projects, and their own internal needs. Rooftop solar specifically gets a mention for strong growth. Antique notes a robust pipeline. ICICI saw 40% revenue growth last year and expects volumes to double in FY26.
Doubling rooftop volumes.
Okay.
Good. So solar's firing on all cylinders. Anything else in renewables?
Wind. Antique expects them to start placing orders for wind projects soon. So yeah, it looks like they're diversifying beyond just solar within renewables.
Good to see. Okay, moving beyond renewables. Transmission and distribution, T&D. How important is that part of the business?
Very important. Antique actually highlighted that T&D contributed about 38% of the total EBITDA in Q4.
Nearly 40%. So a really significant chunk.
Absolutely. They've got targets for commissioning new transmission lines, too. Antique mentions over 2,000 circuit kilometers expected, potentially bringing in INR 14 billion in revenue.
And the Odisha discoms you mentioned earlier, that seems key here.
Definitely. All three reports stress how the turnaround and improved performance of the Odisha distribution companies is a major earnings driver now. ICICI actually put a number on it, about INR 1.9 billion in extra profit in Q4 just from Odisha.
1.9 billion incremental profit. That's significant.
It really is. Kotak emphasizes this strongly, too. It seems like a real success story for them.
And could there be more opportunities like Odisha elsewhere?
Potentially. Both ICICI and Kotak mention Tata Power is interested in the possible privatization of discoms in Uttar Pradesh, UP.
Oh, okay. So leveraging their Odisha experience, perhaps.
Exactly. They think that experience could give Tata Power a real edge if those UP opportunities materialize. It could be a big new growth area.
Interesting. Definitely one to watch. What about some of the longer term or more innovative areas, like pump storage hydro?
Yeah, there's movement there. The Bifpuri project looks set to start later this year, according to Antique and ICICI. Antique also mentions the Shiroda project starting around then, too.
Okay, so projects are moving forward.
Yes, and Antique expects them to sign long-term power purchase agreements, PPAs, for these within the next 6 months or so. The longer-term goal mentioned by Antique and ICICI is to have about 2.8 gigawatts of pumped storage capacity by FY30.
And pump storage is important for balancing renewables, right?
Crucial, yeah, for grid stability, especially with more solar and wind coming online, which are intermittent.
Makes sense. What about even further out technologies? Anything on nuclear or batteries?
On nuclear, Antique and ICICI both mention Tata Power is evaluating getting involved in small modular reactors, SMRs.
SMRs, okay.
But they both caution that this really depends on changes to India's civil nuclear liability law, so it's an exploratory phase.
Right, regulatory hurdles.
Exactly. And on battery energy storage systems, BESS, Antique says they're actively developing and sourcing these, again, recognizing how important batteries will be for the grid.
So a pretty wide range of future-focused bets alongside the core growth. Now, all this expansion costs money. Let's talk CapEx and the balance sheet.
Right. Significant investment is needed. Antique projects annual capex of around INR 240 250 billion per year for the next few years, FY26 to FY30.
Okay, quite a ramp up. What did they actually spend last year, FY25?
It was actually a bit lower than planned. Kotak notes they spent INR 162 billion against a target of INR 210 billion. ICICI confirms that 162 billion figure.
So, bit of a shortfall last year, but planning to spend significantly more going forward.
Yes, the guidance for this year, FY26, from all three brokerages is around INR 250 billion.
And where's that money going?
Mostly renewables. About 60% is earmarked for renewables, and then another, say, 20-30% is going towards T&D infrastructure. So the spending priorities are clear.
Definitely aligns with the growth story we've been discussing. How's the debt situation looking with all the spending?
Net debt is reported at around INR 447 billion by both Antique and Kotak. But importantly, Antique notes the net debt to equity ratio has actually improved slightly.
Oh, really? Even with the spending?
Yeah, it was down to 1.0x at the end of Q4 from 1.1x the previous quarter. So they seem to be managing it alongside the growth. Antique also expects annual operating cash flow around INR 150 billion.
Okay, 150 billion in operating cash flow. That sounds healthy enough to support the plans and manage the debt.
That seems to be the view, yeah.
All right, so let's get to the bottom line for investors, perhaps. The analyst ratings and valuations. This is where things often get interesting, isn't it? Different perspectives.
That is definitely the case here. We've got quite a split. Antique has a BUY rating, target price INR 477. ICICI Securities also says BUY, target price INR 470.
Okay, two buys.
But then Kotak comes in with a sell rating and a fair value estimate of INR 335.
Wow, okay, 335 versus 470, 477. That's a pretty wide gap in opinion.
It really is a significant divergence.
What kind of valuation metrics are they looking at? Are the underlying assumptions very different?
They're all looking at the usual metrics, PE ratio, price to book, EBITDA, and interestingly, their projections for, say, fiscal year 2027 aren't wildly different.
Oh.
Yeah, Antique projects an FY27 PE of 19.2x, PB of 2.6x, EBITDA of 10.3x. So similar forward multiples, but completely different recommendations. How does that work?
Well, it boils down to interpretation. Antique justifies its BUY rating and higher target by emphasizing the long-term nature of Tata Power's cash flows and their clear growth strategy, backed by that big CapEx plan. They see a premium as warranted. Okay, they believe in the long-term story and think it deserves a higher valuation.
Exactly. Whereas Kotak, despite projecting similar earnings growth, argues that the current stock price already reflects all that good news. They use the term full valuations.
Meaning there's no upside left at the current price, in their view.
That's the gist of it, yes. They think the market has gotten ahead of itself.
And I saw mentions of some of the parts, or SoTP, valuation in the reports. Can you briefly explain that?
Sure. So SoTP is basically where analysts break the company down into its different business units, like regulated distribution, thermal generation, renewables, manufacturing, etc., and value each part separately.
Okay.
Then they add up the value of all those individual parts to get a total value for the company. It allows for a more granular look, considering each segment might have different growth rates or risk profiles.
Right, so you value the Odisha discoms differently from the solar manufacturing arm, for example.
Precisely. All three reports use this method and provide breakdowns, assigning values per share to different segments like the regulated assets, the renewables portfolio, pumped storage, and so on. It helps understand where they think the value lies within the company.
That makes sense. A detailed way to build up the valuation. Okay, finally, what are the key things to keep an eye on going forward? What are the risks analysts are flagging?
Antique points to a few key monitorables. Can they actually commission all that renewable capacity on time? Will they keep winning new solar EPC orders? And can they capitalize on those pumped hydro and maybe even nuclear opportunities?
So execution is key.
Execution is paramount. And on the risk side, ICICI specifically mentions potential delays in executing renewable projects, maybe slower than expected order booking for solar EPC, and delays in getting the pumped storage and hydro projects up and running.
So the risks are essentially the flip side of the opportunities, things not going according to plan or timetable.
Pretty much, yeah.
Okay, let's try and wrap this up then. What are the main takeaways from this deep dive into Tata Power?
Well, I think the core message is that Tata Power is showing healthy earnings growth right now, and that's really being driven by renewables and better operational efficiency, especially in places like Odisha.
Right.
They have very ambitious expansion plans, huge focus on green energy and T&D, backed by significant planned investment. But
Okay.
there's this clear disagreement among analysts on the valuation. Some see a lot more upside potential based on the growth story, while Kotak thinks it's already factored into the current price.
So for you listening, it seems Tata Power is definitely a major player in India's energy transition. They're well positioned. But that difference in analysts' views really highlights the challenge in valuing a company that's growing and changing so rapidly across different energy segments. Success hinges on execution.
And that leads to a final thought for you to ponder. With this huge push towards renewables in India and Tata Power right in the middle of it, what do you think are the biggest hurdles they might face in actually hitting those ambitious green targets? And how could those challenges impact their finances down the line?
That's a great question to leave things on. If you want to explore even further, you can definitely check out the original reports from Antique, ICICI Securities, and Kotak for all the detailed tables and segment breakdowns.
Absolutely.
Thanks for joining us on this deep dive.
Until next time.